everyone, it's Rena MacPhee here with Arrow Realty, and I just wanted to go over some of the loans I work with commonly. I am a real estate agent, I am not a lender, so I'm just going over some of the basics today. First off, one of the loans that I think is really awesome, what that noise was, is a USDA loan, and it requires no down payment, so it's really awesome. And it has a significantly lower PMI. PMI is private mortgage insurance. It is anytime you're putting less than 20% down, like if you're not going conventional with 20% down, mortgage companies will usually require private mortgage insurance just to cover them because you don't have as much skin in the game. So, but their PMI is significantly lower than FHA or conventional. And then also, you can roll in your closing costs if you aren't already, if it hasn't already been negotiated. So, up to the appraised value. So say you're buying the house for $150 and it appraises for $155, you can up your purchase price to $155, roll in those $5,000 worth of closing costs so that at closing you come to the table with $5,000 less in closing costs. Not to say you couldn't do that with FHA, but you can't do that after it's been appraised. It has to be negotiated up front, whereas with USDA it can be negotiated up front, but if it still comes in higher and you still have closing costs that aren't covered, then you can wrap in those additional closing costs that weren't already negotiated. However, it does have a few more requirements for USDA. It does require a higher minimum credit score, a little bit higher than FHA. It has income limits depending on how many people are in your household, and there are geographic restrictions. That's probably the biggest one. So it doesn't work in urban areas, it only works in rural areas. And I will drop a link down below so you can search an address yourself if you want to, although I'm happy to search an address for you, and I'm sure your lender would be as well. A big reason of why I wanted to make this video is because I realize I have a lot of clients that are working with lenders that are from like Orlando, and because Orlando is primarily urban, those lenders sometimes forget to mention that USDA is an option. So I just want you to be aware of all the different loan options that you have. Not to say that I'm giving you all of them, but just a few of them to be aware of. To FHA. Also requires a low down payment, so nothing down, but it is 3.5% down, which is significantly low. But there are no geographical restrictions on an FHA. So you can buy in an urban area and you can buy in a rural area. And the requirements are a little bit less stringent too. So your minimum credit score is going to be lower, and your debt to income ratio can be a little bit higher with the FHA compared to the USDA. And then with a conventional loan, typically a lot of people think you have to put 20% down. You don't have to put 20% down, but that's the way that you have where the PMI drops off typically. But down payments can range from 3% upwards on conventionals, so that still could be an option for you. For USDA and FHA, this does not have to be your first time home, but it does have to be your primary residence. So just keep that in mind. And I think something else I forgot to mention, I work in Lake Sumter, Marion counties, primarily Lake though, and so what's considered rural is like Umatilla, Grand Island, and Asatula. Tavares, Mount Dora, Eustis, most of that area is not considered rural, it's considered urban, so you can't get USDA loans for a lot of it. But it just depends on where it is, because there are some parts of them that can. So if you have any questions or you have an address that you want to ask me about, I'd be happy to help you out or get you hooked up with a lender. I have a lot of really awesome lenders I work with. And until next time, stay safe.